Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, February the 8th. The year's 2024. Let's talk trading. Trading with Walmal. Greed. These videos are for educational purposes only. Your results may differ from mine and different from Walmal. Walmal, you had a little adventure today, or a little dealing with what you thought was greed. Or what
Yeah,
you called
well,
greed.
yeah, I called it greed. You said it may not have been greed, but yeah, it was just one of these situations where price had moved to a certain place, and I'm looking at the thing, and I'm missing my TP by a point or two, and I'm sticking to it because for whatever reason I'm sticking to it, and I didn't get out, and the next thing you know, it ran all the way back to the beginning, so I was now underwater by not a lot, just a little bit, and the market went and smiled on me and ran back down, and I was able to get out okay. But the thing is, was it great for me to stay in that trade to try to get the last bit of where I knew it was going to go to, or was it just part of trading and just recognizing that trade, the market moves, it breathes, it goes up, it goes down, it moves around, and as long as you're not violating rules, and as long as you're not violating your, most importantly, your risk management, then that's okay. You're okay with that. And so the battle for me was an intellectual battle, I guess, of was I being greedy to try to get that extra point or two, or was I just following my rules and just being blind about it? Because if I had a computer going and managing my trade, the computer wouldn't care. It wouldn't have ever taken me out, right? So,
Yeah,
that was the internal fight I had.
yeah, because what I had said was that were you really being greedy, or did you see something? And you said that was what if you could see that, then that would make all the difference, right? If you knew what you saw.
Oh, absolutely. If there was something out there that I was seeing, and the thing is, there was nothing consciously that I was seeing that, well, other than the fact that, I said that, if you recall, I went and said, this market, once it breaks this area, it's got to go back down to the 90 area. And then, and if it breaks the 75, it was going to go down to, it would go down all the way down to 60. But, so there was internally, and that was just based on looking at, basically drawing train stops, as I like to call them, out on the chart, because I drew areas where I saw support, that was previous resistance and actually even previous support areas out on the chart from earlier the month. And I just knew that if, hey, we clear this early here, we're going all the way down. So that I had an inkling that that's what it was going to do, and it did do it. It never got down to the 60 because it never broke the 75. It actually closed below it once, but it never really broke through that area. So we were, we never actually had a run for the 60. But, so I had that inkling that, hey, this thing could run all the way down there. But, is it greed to want all that, or is it no? Because that's something that that is completely possible to occur. So you should, I guess, try and set your targets for that. But at the same time, reality is that, hey, it didn't work out. So does it make more sense just to go and say, okay, it's now gone and challenged it? I think it challenged that area where I wanted to really get out, and it never got to it, like 2 or 3 times. And finally, on the third time, I went and said, I'm done with this. I'm just taking my money off the table, and and I got, I got what I wanted to get. But man, it took a lot, a lot to do that. And part of it also that made it even more difficult was the fact that we were coming up to a news event, and I don't like to go and be in a trade prior to a news event. And so it's the type of thing where I was time limited, because what was going to happen is that no matter where I was, in my trade, underwater, above water, you know, making great money, losing great money, you know, no matter what it was. And at a certain point, I was going to go and I was going to exit my position because I don't want to be in there. That's part of my risk management rules. I just don't want to be in that position where, you know, what if the news came out and it was something that was completely unexpected and she decides to go and run 40 points against me? Well, that's that's an unforced error in my book because I created that error. You know, and because I had those rules in place, I shouldn't make those errors. So I was getting out no matter what. But do I need to go and sit through all of
that? Do you?
No. Well, I don't know. You know, that's one side says yes, and one side says no. The side that says no is sort of like, you know, what is that doing to you emotionally? How is that draining you? How is that going and preventing you from taking the next trade because you got to recover from what you went through? You know, that's part of what I think about a lot of times. And then the second part, or the other side of the coin, is that's just part of the market. The market breathes. It goes up, it goes down, and you know, the market doesn't move from point A to point B in a straight line. Or at least it doesn't do it very often. You know, what do we say the market does? It trends, 70, 80% of the time, right? Well, that's 78%. That's that movement back and forth.
No, it ranges 70. It ranges 70% and only trends 30.
Okay, sorry about that. I said it backwards. Yeah, but you know the range. You know the ranging is like 70% of the time, 80% of the time. You know, and that's just part of that normal market breathing. And you know, and a lot of times, unfortunately, where we put our TPs is right where the next area of ranging is going to occur. We put up TPs in certain areas for a reason because we know that that's a train stop. We know it's going to run into problems there. And sometimes we misguess or we get greedy and we want to go and we want to, you know, the train station, you know, isn't just a single point on the chart. No, it's usually an area. And so of course we want the bigger side of the area, right?
Well, you know, I guess we have to define greed. We kind of talked about that before we went on video. So I'll let you go first. How you define greed?
I guess I define greed as trying to go and get more than you were originally expecting to get. So when I go into a trade, I expect to get X pips. Okay, that's my hope. That's my aspiration. You know, I'm trying to go and get X pips on a particular trade, and that's just based on what I see on the chart. You know, it's the type of thing I do. Let's say we're going in a flip-flop box. I look at it and say, okay, I've got a flip-flop box. Above that flip-flop box, I've got white area, you know, or clear space, whatever you want to call it, you know, until, you know, 5 pips up or 6 pips up. Okay, I want to get 3 pips on this trade. Oh, I've got clear area for 10 or 15 pips. You know what? I'm going to try to target 5 pips or 7 pips. You know, and that's kind of what I try to do. I have an expectation of where I want to be at the end of this trade, where I want this trade to go, to where I expect the market to go to. Well, the thing is, when you get to that area, greed for me would be, okay, the market stopped where I thought it was going to have some problems, but I want more. And what I do is I don't get out of the trade there, even though the market stopped. Okay? And what I do is I go and try to go and hold out for the last pip, the last whatever. Now, the difference between that and, you know, the other alternatives, let's say the trade goes and I expect to get 5 pips, but it's, you know, I've made my 5 pips and it's still going up and I'm still making, now I'm making 5.5, now I'm making 6, now I'm making 6.5, now I'm making 7. It's staying in that trade. That's not greed. That's just following the market where the market's going. But when you're sitting there, okay, the market stopped where you thought it was going to run into trouble, but you're trying to extend the trade beyond where you thought it was going to go. That's greed in my book.
Okay. I guess greed in my book would be you get into a trade and as you said, you see it stop, you see your lines on the chart, and you don't take it. So like right now, if you would have taken this flip-flop box So you'd be up 2.7. And if you look to the left, you know, you see, well, you know what, this thing should probably hit 85. Okay, so now here's what happens is you want to hold for 85, and then if it comes back against you, it's like, do you take it off, or do you say, you know what, I'm going to wait for 85? And so instead of having the 3 pips, you were going for 5, and the next thing you know, it goes against you, and now maybe, like you said, you scratch it at maybe, you know, 1 pip, or maybe you wind up in a drawdown situation and you have to trade your way out. You know, that's one form of greed. But an even worse form of greed is, say you get in a trade and it goes against you, and then you try to average, and you average in, and then it comes back almost to your break even. You're within, you know, less than a pip of your break even, and you just don't want that loss, and the next thing you know, you're down 5, you're down 10, and it runs away from you because you got inflected. So like right here, you know, as I just called it, I said, you know, it's going to go for the 85, and then if you look left, it's like, you know what, if it breaks this, you know, maybe you could even try to cover this M30 candle. You could go for the full cover. But as you say, if you look left, now you're in an area from that last half hour. You can see right there, it ranged a bit between this 85 and 95. It was stuck in that range for a while.
Right. Yeah, it's funny because I went into the trade right before we got on the call. I got in the trade on the flip-flop box at 80.5, going back, how many candles would be, oh boy, let me count the candles back here. It would have been on candle 12.
What's the time, the time stamp on that?
Oh, the time stamp on it would have been 16:05.
Okay.
Okay, but I went in at that point in time, and then of course, you know, I was targeting 85, and the reason why I targeted 85 was because exactly what you're saying. You just looked to I looked over to the left. There was what I saw was there was a big drop from that news, and that was the midpoint of one of the 1 minute candles. And I'm thinking, yeah, we already covered one big drop candle. I don't want to go and be the one that has to go and fight the second one. If we get to that area, I'm going to get out the midpoint of that candle. So I put my TP right there. Now, greed for me, in that particular situation, I think we're saying the same thing here, well, on this part of it anyway, is that if I would have stayed in that trade, because it stopped right there. It stopped there, and if you go back, this is all on the video, so you can go back and look. So I'm sure your charts probably did the same thing. But it got to that area, about 85.3 or something like that, and what happened was it just literally sat there and didn't move for about 10 or 15 seconds. And then it started to continue its run up. And, you know, it's the type of thing where I could have easily gone and moved my TP out of the way and let it run through that area. See, I think that's part of the greed too. It's like it's sitting here. You know what? It's going to go up. I know it wants to go up. It wants to go and complete that candle, and of course it did. But the thing is, I'm looking down and saying, yeah, the completion of that candle, that was not smart holding out for that because it stopped. And the reason why I say that's greed that's in there is because what's actually happening, in my opinion, you know, behind the scenes is that, you know, there are folks out there trying to make a decision. Do we drop it now or do we wait for it to get to complete that candle? And so what's happening is there's indecision in the market. My point is, take the money now and be happy with it. Yeah, fine. If I would have been greedy and would have held on, I could have picked up another what? Let me go measuring. Could have picked up another 2.5, 3 pips. But is the chance of 50-50? You know, what if he gone and said, you know what, we're going to drop 2.5 pips?
You know what?
You know, we're out of time.
Yeah, fellow traders. I tell you, sometimes this 15-minute goes by so quick. I guess that's why it's the fastest 15 minutes in trading. So anyway, fellow traders, let us know in the comments how you define greed, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.